Well, Siddharth, it's really nice to see you again. I trust you're keeping well.
Yeah, thanks, Rodney. Nice to see you as well.
Well, so I know many clients are talking to you about the taxation of the digitalized economy in India. Tell me, Siddharth, what has India's position been so far, and what legislation has been enacted recently?
That's right, Rodney. I mean, just like other parts of the world, this has been a matter of big debate in India. I remember back in the day, I think it was 2012 or 2013, when we had a series of interesting, case law developments in India where the Indian courts, the higher courts, the tax tribunals, looking at digitized, businesses, came to the conclusion that, the current tax system basically do not provide a framework for the Indian tax authority to, tax basically digital services or online advertising and things like that. I remember that was a sort of a landmark case because it involved taxation of payments made to Google, which the Indian tax tribunal basically said that, look, a website is not a permanent establishment, and therefore, it was quite clear from then on to the Indian government that something needs to be done about it. And just, while that whole policy was being discussed, I think we also had in parallel the OECD BEPS, initiatives, and Action One, as you know, was directly on the point. And taking a cue from that, we had some series of legislations coming up to, tax or kind of fill that gap, so to speak. We had in 2016, as early as 2016, we had a digital service tax on online advertising at 6%, which was introduced. Then in 2020, recently, we had that kind of tax being extended to even sale of goods by e-commerce operators. And then finally, as early as earlier this year, we had the sort of significant economic presence related rules, which basically create a virtual P under the domestic law based on certain parameters. So we had these three kind of legislations getting enacted, all towards plugging the hole of, or rather giving the tools to the Indian tax authorities to tax digital economy.
That's really interesting stuff. So a lot of legislation to bring foreign operators in the digital economy into the Indian tax base. How do those rules interplay with existing Indian tax treaties?
Yeah, that's really an interesting point. And, the various legislations I mentioned interact in a different way. Insofar as, the digital service tax, which we, by the way, call the equalization levy, insofar as that is concerned, it was brought in as a tax outside the income tax framework entirely. And therefore, the interplay with tax treaties is completely avoided. This is a tax which is not even an income tax. And therefore, there cannot be any relief granted on account of treaties. And the other consequence of that is that you cannot even grant any foreign tax credits of this because of that. So that was one implication because of the way it was introduced as a separate legislation outside the income tax rules, and it's not covered as a covered tax in the treaties as well. Whereas the other legislation that I mentioned relating to the significant economic presence, which is more to do with a domestic PE definition, which does not really rely on physical presence, but more on just a digitized presence or a transaction-based presence, if you may, an interaction-based presence with the market jurisdiction. That, of course, still is under the income tax framework in India, and therefore, if there is a treaty, then the permanent establishment rules will still prevail, and hence those thresholds will still apply. So to that extent, you wouldn't call that a unilateral measure because it is still under the income tax framework, and relief can be sought under the PE, thresholds.
Well, that's interesting, Siddharth. One set of rules outside the scope of treaties, one set of rules
Yeah.
inside the scope. So a little bit of a challenging landscape now. I'm going to ask you to put your crystal ball gazing skills to the test. This obviously is an area of significant change going on today. What is the likely way forward in terms of the inclusive framework being discussed globally?
Yeah, I think great time to ask that question, Rodney, because just recently we've heard update on this particular point. Of course, we have had the big announcement in October this year, where all the countries involved in the inclusive framework have signed up on a future roadmap to towards Pillar One and Pillar Two, OECD Pillar One, Pillar Two project. And towards this, there's been a agreement between the nations to not introduce any other, digital services tax, which India has also agreed in principle. Further, what the Indian authorities have clarified now is that the interim measures, so to speak, such as the digital services tax, which we speak of, the equalization levy, those, will be removed eventually. So this is come 2023, these will be removed. And furthermore, as recent as a couple of weeks ago, India has announced that the agreement that US has done with the five nations with regard to the transitional relief for the interim measures. India has announced that the same terms will apply with the US as well. The details will be announced, I think, in February next year. But in essence, that is to say that this equalization levy, which is currently in play and will be in play till 2023, I presume. It'll be possible to take a credit of this equalization levy against the taxes which become levied under the two-pillar approach. So some roadmap, some clarity, and some sense seems to be prevailing. Looking into the future.
Well, that's really interesting, Siddharth. So that really speaks to multinational businesses having to watch the evolution of the inclusive framework, because at the moment they're subject to a couple of different Indian specific regimes, but then there'll be a transition into the new system as the new system comes into force. But I'm sure the transitional arrangements will be something that people need to watch for.
That's right, Rodney. And I mean, there are two sides to the coin. One is, the future looks like reasonable in terms of what will happen with the unilateral measures reducing and, more cooperation. But on the other hand of the coin, on the other side of the coin, rather, for the interim period for 2-3 years, it's been clarified that these measures are there and compliance is required. So, this is also something that we are working closely with our clients to ensure that, at least their positions are compliant in the interim period.
Don't be complacent. Pay attention to what the rules are at the moment. Well, Siddharth, this is a fascinating area and quite a lot of change. So I look forward to catching up with you again in the very near future and seeing how things are progressing. Good to see you again, Siddharth.
Likewise, Rodney. Cheers.